Today, welcome back to my live tutorials. So this week I will be focusing on profit margins in e-commerce businesses. And the first one, the topic for today is the guide to gross profit margin, how to calculate it and why it matters. If you are running an e-commerce business, it is important to understand what gross profit margin is and how to calculate it. This figure tells you how much money your business is making after accounting for the cost of goods sold. It's essential to track this number over time in order to make sure your e-commerce business is profitable. In this tutorial today, I will discuss what gross profit margin is, why it matters, and how to calculate it. First things first, what is gross profit? Gross profit is the difference between your revenue, sales turnover, and the cost of sales, also called cost of goods sold. This figure represents the amount of money that your business has left over the account after the accounting for the cost associated with producing or acquiring your products. When COGS are recorded correctly, they should be matched with the revenue from the same period. How to calculate gross profit? To calculate gross profit, you should subtract costs of goods sold from your revenue. As simple as that. So for example, let's say your company had 100,000 in revenue last year and 80,000 in COGS. This would give you a gross profit of 20,000. As simple as that. How to calculate gross profit margin, on the other hand? The gross profit margin is a measure of profitability that tells you how much money your e-commerce business keeps after accounting for the cost of goods sold. And to calculate it, you should simply divide your gross profit by the revenue. So it represents a portion of the gross profit in relation to your total revenues. So let's use the example above. So your gross profit was 20,000 divided by 100,000, it's 20%. Simple. Why is gross profit margin important? Gross profit margin is a key metric for e-commerce businesses because it tells you how much money your company is making after accounting for cost of goods sold. This number is important to track over time because it can give you important insights into the profitability of your business. Strange movements in this margin would indicate inventory is being expensed immediately at the time of purchase, which is incorrect. An inconsistent margin is inaccurate. Correct expenses should be matched reasonably to the revenue from the same accounting period and show very few turns in gross profit margins. When considered alongside other ratios, it can also help you to understand why your numbers might be changing. For example, if your gross profit margin remains the same, but your net profit margin increases, then this could be because of the fluctuations in other operating expenses in your business. One of the most important things you can do with gross profit margin is to track it over time. This will give you insights into whether or not your e-commerce business is becoming more or less profitable. To do this, simply calculate the gross profit margin for each year and compare the numbers between the periods. If you see that your gross profit margin is declining, it is a sign that your business might be in trouble. This could be caused by a number of factors, such as increasing costs or declining revenue. It is important to investigate any changes in gross profit margin so you can take steps to improve your bottom line, your net profit. Of course, declining gross profit isn't always a warning sign. It could be due to investment in growth or changes in your business model. However, this doesn't mean your business is in trouble. You are simply preparing for future success. So the key takeaways for today. Gross profit margin is a key metric for your e-commerce business because it tells you how much money your company is making after accounting for the cost of goods sold. It's important to keep an eye on this figure and understand the reasons behind any changes so that you can make decisions to improve your bottom line and stay in control of your finances. If you want to learn the exact step-by-step plan to increase your profits by at least 30% in the next 12 months, I encourage you to watch my unique training. It's available on demand and it's totally free. Just comment profit down below and I will get the details to you. That's it for today and see you in the next video. Bye for now.